Welcome back to Financial Freedom with Jewel. Today I'm going to show you someone who has, like most people, a car loan. In this situation, they're at about $40,000 a day owe. They have about a 7-year term at a 6.99% interest rate. Now, in this chart, I'm going to show them how they can pay that car off in half the time, eliminating all that extra interest. This is the Velocity Banking way. You owe it to yourself to watch this entire video. Like, subscribe, and share. You're going to learn a lot. Just because you've been told by the car loan company, hey, we can give you a wonderful rate. We can give you a 7-year term, and we're going to make your payments low. That's the trick of the banks. But in this video, I'm going to show you how to flip that upside down to where you are benefiting and you're paying your car loan off in record time. Okay, give me one moment. I'll be right back. Okay, here we go as promised. Remember, I told you this individual, they're looking to pay off their nearly $40,000 auto loan in record time. But I want you to notice something here. When it comes to Velocity Banking, which we're going to use, and we're going to do that strategy today, even if you don't make a whole lot of money per month, as long as you make more than you spend and you're willing to be intentional about paying off your debts, you can do Velocity Banking. Look at this person here. They bring in $3,200 a month. Their expenses are $2,624. But notice, you guys, they have a positive cash flow of $576. Now, they didn't see that. I'm like, you have a positive cash flow after you're done paying all your bills. What are you doing with it? Well, I didn't know I had it. Whenever you have extra money just laying around and it's not being strategically targeted, you're going to blow that money. You're going to spend it. Why and how people do it, I don't know. It just happens. I'm going to teach you today to look at what you bring in. Be intentional about paying off your debts. You're going to be amazed how it's just a mindset, you guys. Once you change your mindset, things begin to line up and they work out for you. Okay, let's go back to this individual. Okay, look at their rent. Their rent is $800 a month. Their car payment, $512. That's what we're going to target. That car has a balance of $36,953. That's what we're going to begin to target. Look at their insurance. $412. I'm going to have to talk to them about that because that's awfully high. Even if you actually have 3 cars, it shouldn't be that much unless this person is a reckless driver, which I don't think so. You guys, remember, don't just take what they give you. Shop around. Insurance companies, they're working for your business. Shop around and find out how competitive you can be on that insurance policy, because I'm sure we can get that way down. Let's move on. Now, we have their food, $325 a month. That's pretty good. I have an error here, you guys. I do have $300 for their gas. There's an error. It should be gas and utilities are $300 a month. Okay, $75. I guess that covers like their streaming, like their internet and their Netflix and all those kind of things. But notice something else. We do have a spot here for fun. This person spent $200 a month just going out, having either girls' night, guys' night, eating out, movies, all of that. With Velocity Banking, we want you to feel like you can do this. Sometimes you go on a budget that's so stringent, you will give it up and you'll quit because you're like, if I have to spend 2 or 3 years doing this and living this way, I don't want to do it because I don't see any reward. I don't see that I'm able to do anything. With Velocity Banking, we tell people, look, put all those expenses in there. Put that fun money in there because that way you can feel like as if you're reaching your goal, but you're not doing it at a point where you are strained and you feel like it's just an overburden. You can't do it. With Velocity Banking, we want you to succeed in it. If you have a savings account, look at that too. Maybe that $200 will go to your savings. Whatever it is going to help you to stay on track and keep this budget. That is what we want you to do in Velocity Banking. I almost hate to use the word budget, but anyway, you guys, budgets are just showing us what we bring in, what we spend, and how to use that money. So, okay, back to this individual. Now, remember, they have $576 a month left over. They were telling me something in talking to them. They actually have a $50,000 line of credit. Why? I asked. Oh, for emergencies. This is an emergency. No time like the present to use that money. It's just sitting there doing nothing. Let's make that line of credit work for them. I'm going to propose, I'm just a voice, they have to make that choice, that they take $37,000 of that line of credit and pay off that car note immediately. Get it out the way, pay it off, be done with it. That way they're not paying on the amortization schedule. Remember, with the amortization schedule, you guys, you're going to have the same payment for the life of that loan until you pay it off. With Velocity Banking and you're using lines of credit, the minute your balance goes down, your payment goes down. You cannot get that with an amortization schedule. But with Velocity Banking, you can get that. So let's say they've gone into the bank, they paid off the car completely. That has freed up an additional, you see the chart, their car payment was $512. $576, which was their cash flow, plus the $512 equals $1,088. They have all of that they can use to throw at their principal, thereby eliminating the amount of interest they're going to spend and how much they're going to use over the life of this line of credit. Remember, with the line of credit, we're only going to take out the $37,000, which means we're only required to pay on the balance that's owed. As that balance goes down, once again, the payment is going to go down. And the beauty of a line of credit is that as you need to pick and pull from it, you can do that and it's okay. And you're just paying off of what the balance owed is on that line of credit. In this case, we're only going to take out $37,000, pay off the car loan. We have $13,000 still sitting up in there. But now we have to target all of our energy to paying off that line of credit. Now, I know some of you are saying, well, that's just dumb. You're going to move one loan to another loan. Nope, we're not moving from loan to loan. We're moving from loan to a line of credit. Line of credit is open-ended. You can take, pull, pay back. You can do it as many times as you need to based upon the terms of that line of credit. It may be 10 years you can do that, but I'm going to show you how they're going to pay off that $37,000 in about 3.5 years. Remember, under the amortization schedule, they were in that car loan for 7 years. No, what's happening with that? The banks are allowing you to make that, they call it a low payment, but they're not telling you in the very beginning of that loan, they've already put the interest in there, but they're going to charge you interest first before it ever gets to that principal. So basically, let's just say for the first 3 years of that 7-year loan, you're paying all that money in interest and you're barely tackling your principal payment. So basically, you're buying 2 cars. You're buying one for the bank and you're buying your car. That does not make sense. Let's change that. Okay, we've gone into the bank and we've already said, hey, listen, we're going to write a check. We're going to pay off that line of credit. I'm sorry, that loan. We're done with the car payment. Now we've injected that car payment money into the line of credit, which gives us now $1,088 a month that we can throw into it. But remember, you guys, because we are doing a line of credit, they're going to charge you some interest. Now, in this case, it was 12%, but it doesn't matter. We're going to throw the whole entire $1,088 into paying off that line of credit. Now, they're going to take off their difference of interest payment. But because we're moving so fast in this, they're going to get far less interest than what you would have gave a 7-year term under a loan. Okay, let's look at month. Okay, for month 1, we know that we owe $36,953 back to the line of credit. What we're going to do is we're going to take that $36,953 times it by 12%, which was our interest rate for the PLOC, I'm sorry. We're going to divide it by 365 days out of a year, and we're going to times it by 30. When we do that, our first payment is going to be due of $364. Have you noticed that they're paying $364? They were paying $512. Now they're paying $364. But because we're injecting this entire $1,088 into our line of credit is good because when they see that you've already paid, anything over that $364 goes directly to your principal. You don't have to call them. It just works that way. They do it automatically. As long as they've got an interest payment out, they're happy. They're going to inject all of that. So in this scenario, about $720 is going to be injected into your principal. Thereby, let's look at month 2. Month 2, we're at $36,235. We're going to times it by that 12%, divided by 365 days out of a year. Let's times it by 30 days. Now your payment due is $357. But remember, you're going to inject that whole entire cash flow into that $357. Once they get their difference off the top, you're going to see about $730 going directly into your principal. Now we're moving. We're at month 3, $35,510. We're going to times it by 12%, divided by 365. Let's say times it by 30. Your payment due is about $350. Now, you guys don't hold me to those numbers. It's pretty close and all. The bank has their way of doing things, but for the most part, you allocate $350. Okay. Once we've injected our entire cash flow into this $350, we're looking at about $738 that can go directly to our principal. They're going to get their $350 out. They're going to inject all the difference into your principal. Now in month 4, you are down to $34,777. Beautiful, 37777. times it by that 12% interest rate for the line of credit, divided by 365 for the number of days in a year, times it by, let's say 30. Now you're 343. You're going to inject that 1098 cash flow into that 343. Now you're at about what? You're about $730 something dollars extra that goes directly to your principal, taking you down to $34,036. Times it by your 12%, divided by 365, times it by 30 days out of a month. Your payment is now $363. Wonderful. Can you see when you take that 1088, inject it down here, you're about at $750 that's going to go directly to your principal. You guys, that's how velocity banking works. We take impaired interest payments and we take and throw an excessive amount at our principal payment. This is at a credit union. They're just doing it. They're taking their principal payment, taking their interest payment, throwing the rest into their principal payment. Okay, you guys, half a year. I'm going to show you half a year. Now they're at $33,289. We're going to times it by 12%, divided by that 365, times it by about 30 days for a number of days in a month. 328. Look at this chart. Have you seen something here? Look how their interest payments have gone down every single month. As their balance goes down, so their payments. Once again, on amortization schedule, you're not going to see that. He was paying $512 every single month like clockwork. He wasn't seeing numbers go down like that. And because we're injecting our positive cash flow, all of it in there, you guys, if they continue to go with that cycle, 3.5 years, they're going to pay off that line of credit. And the beauty of a line of credit is that once you have it back, if it's a 10-year draw and a 10-year repayment, they're going to have that paid off in 3.5 years. Now, I didn't think about things like raises, things like maybe they came into an excessive amount of maybe extra money that they've looked at their expenses thinking, I don't have to spend $50 going out to eat. Maybe I'll spend $150 a month. Maybe they'll bring that down to what, $150 a month that they're spending. I'm betting on his insurance even also coming down because that's just too high. I would say at least an additional $200. Can you imagine him throwing that $200 extra dollars? Now he's basically throwing $1,300 a month into his line of credit. He can pay that thing off probably in 2.6 years. You really can. But we're going to do 3.5 years to be safe because that's where the numbers are at. Just assuming all these factors are all the same. And one thing I'm going to say is that with a line of credit, you guys, because it's open-ended, you can pull as you need to pull from it. Remember, if something were to happen and you were to say, look, my car went down, it's okay. You would just go ahead. You have $1,088. That can be used for emergency purposes. You may get off of this plan for maybe a month or two, and it's okay. You know how to go back to it and work your numbers again. This works for any debt that you have. Remember, as long as you make more than you spend, you can do it. For those that cannot get a line of credit, it's okay. Long as you work on getting your credit increased, you can call your local credit union. You can apply for a line of credit. Or if you're a homeowner, you can apply for a HELOC, which is a home equity line of credit. We understand one thing, credit is key. So you have to maintain a good, at least a 640, 650 credit score. But you guys, even if you're stuck and you're like, I like this jewel, but I don't qualify, it's okay. Look at my videos. We talk about how to run your credit score up in record time, the legal way. And you're gonna be able to take out lines of credit, home equity lines of credit, all those kind of things. So I'm just gonna propose to you that if you could use a line of credit to pay off your bills, come out of those amortizations. Those are just taking and sucking money away from you, and they're just raking you over the coals and robbing you with interest payments. I always say, I'm just a voice. You have to make the choice. But on your way to financial freedom, I'm Jewel, and I'm here until you win. We'll see you next video. Bye-bye.